4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. They're both free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Today's video, we're going to go over the New York session for the week and also reviewing a simple rinse and repeat process, understanding the opening range. Monday, day 1, the opening range in a new week. Tuesday, day 2, typically expands the range, and that forms our initial balance. And that can lead us into 3-day setups, 3-session setups, and trigger days or signal days, identifying opportunities and looking for an instrument to give us one great trade. So having some indexes, some metals, some energies, some currencies, or even just the US dollar index if you're trading the New York session, to simplify things and understanding you're looking to identify one great parabolic opportunity as opposed to trying to trade every day on a market. We're looking for scalable rinse and repeat setups. So just simple understanding again, Monday, Tuesday, Wednesday is the front side of the week. Wednesday resets and becomes the midpoint range into the back side of the week, day 1, day 2, day 3. Monday's the opening range, Wednesday's the midpoint range, and Friday's the closing range. Tuesday, day 2 typically expands the range, and we can look for range reversal opportunities on a Thursday. Now, some of these are going to be larger dump and pump templates over the course of a week, and we'll look at an example of that in a moment, or pump and dump templates. Page 19 in the playbook, we have an example of a pump and dump template, and page 20, an example of a dump and pump template. Just a simple, basic pattern that shows up on any instrument, and then the patience to sit and wait or identify the signal days, and then how does price set up into the session that you're trading. So you can have some instruments that you're following. Now I'm looking for New York based opportunities. So if you're trading the Asian session, you may have a basket of currencies or instruments that will reflect the Asian session. I obviously the Japanese yen, maybe the Aussie or New Zealand dollar cross pairs, an Asian index, and of course maybe a metal. Same thing applies for the London session. Now here's the thing I want to just emphasize. We're not looking to try and trade a market every day. We're looking for the template to set up for a scalable parabolic opportunity. This is the US dollar index. Again, we said Monday was the opening range in a new week. Thursday in the previous week formed the high of the week level. And Monday was an inside day on the US dollar. Now the inside day, page 69 in the playbook, is a signal day. Now there's an entire list on the inside day, signal day opportunities. And that can be a false break reversal type of setup or a trend trade setup, depending on how that instrument is already trading. Now, Monday's the opening range. We're inside of the previous weekly level. We may now be looking for false break reversal opportunities. Monday's day 1, Tuesday, day 2 typically expands the range. Now, this market broke out at the beginning of Tuesday's Asian session and continued to break lower. We have inside day traders triggered into the market. Now, remember, we're inside of a previous weekly high as well as Friday's low of day level. Friday is the closing range in the week. So we have a larger box. The market continues to break down. Now, understanding I'm in the New York session, this market has already left the station. Traders in Asia or London may have had the low-hanging fruit on the false break reversal opportunity. Now, Tuesday, day 2, closes in breakout. Again, an opportunity to put an instrument on our watch list to see if it sets up into our session. Now, this market traded as an inside day on Wednesday. Now, if you go back to the playbook course section, there's a video and a section in there where we talk about Wednesday being the midpoint range and the signal day. Wednesday formed an inside day, but also a first green day signal. Now, this market closed in breakout on Tuesday, but markets that close in breakout can offer traders from the ACB Masterclass an opportunity potentially if it sets up. This market did not set up. It was an FOMC Wednesday, but we close as a first green day. Now, again, I want to repeat, I'm just sitting on my hands waiting for the market to set up for one parabolic explosive opportunity in the week in the New York session. Now, sometimes we're going to get more than one. Sometimes we're not going to get any. If you have a basket of instruments and you're looking for 2 to 3 scalable opportunities, then you understand why it's important that we're not trying to catch all the moves everywhere. We're waiting for the scalable opportunity. First green day is a low of day, low of session buying opportunity if indeed it sets up. Now we come to our screen in the New York session. This market has already broken out of the high of day level early on in the day. Now we come into our New York session window. Traders will recognize we already have breakout traders in the markets, and we're targeting potentially now on Thursday, day 2 on the backside, the high of week level from Thursday, a dump, coil, and pump opportunity after our first green day signal. Basic model for trade entry criteria, page 29 in the playbook, helps us remove analysis paralysis, taking a position in the market, placing our stop loss, and either a hold till close profit target or a measured move range expansion and tightening that stop up towards the end of the day. A first green day signal, New York session opportunity, US dollar index, and going back and just understanding the importance of being patient and sitting on your hands and waiting. This is a scalable opportunity. Now, for traders who understand the opportunity as it's setting up, scaling in rather than going in just with one whole position, scaling in and removing some profits to get paid on the trade and leaving those trailers to continue to run. A dump, coil, and pump opportunity on an FOMC week, and just sitting and waiting and letting the market set up. First green day signal, Wednesday, the midpoint range of the week, and how does price behave into our New York window? Now, natural gas is an instrument that trades predominantly in the New York session. We had a market that closed in breakout on Friday, proceeded to auction higher on Monday, the beginning of the new week, before dumping down, forming a high of week level. New high of week level on Monday, day 1. We've broken out of Friday's closing range. Friday closed in breakout, and that formed a first red day. First red day, page 58 in the playbook, is a high of day, high of session shorting opportunity if indeed it presents. Now we're on the front side of the week, and we're also looking at trading back down into the breakout. So remember the understanding, when markets break out, they will do one of two things. They will fail and reverse, or pull back and continue. Now in this particular case, we have a first red day signal. How does price behave on the day? We have a larger pump and dump. Traders into our 10 a.m. club had the shorting opportunity after the first red day signal back into the breakout. First red day dump back into breakout traders from Friday's breakout of Thursday's high of day level back to Thursday's closing price. Now our first red day signal that came on Monday, just to demonstrate to traders, there was some traders that got shaken out of the first red day short in our 10 a.m. club. Traders just want to repeat, keeping things really simple. If you're taking a position in the market, some traders got in early, and as I've mentioned before, you don't need to get in early. You can wait for a market to lock in the high and pump back up, and we have a position that can be taken. But if traders had taken this first reversal, again, just clarifying simplicity, putting a position in the market and placing your stop. the market had given us a first red day signal on Monday. We made lower lows before pumping up into our US session open window. The market breaks down from that high of day level and pumps back up into that level again. So traders who were in initially, if they've gone to break even, are stopped out. But the market actually hasn't cleared any levels yet. So we don't want to be going to break even until the market clears a level. Our initial risk on this trade is still the same. If traders waited for the pump up, we have an opportunity now for a tighter risk entry. As the market starts to break down, we can take a stop at that extreme. Once it clears that level and closes outside of that low, we can then move our stops to break even, have a take profit level put in place, and that is the trade itself. Now here's the thing to think about. Now sometimes an easy way to do this is if you're taking a position in the market, placing your stop and your take profit level and walk away. And as Brent Penfold used to say, either getting stopped out or it hits my profit target. If you set an alert or come back in 15 minutes and the market has cleared that level, moving to break even, walking away and letting the trade play out. The only thing a trader can do by being at the screen is mismanage an opportunity that is still working out. So we have an opportunity here where traders get in early, it breaks down, they go to break even, it comes back, and they say they got shaken out. And that is part of what has to happen to shake traders out of winning positions. And that is having the confidence and building your muscle memory that the market, once you're in and your stop is in place, this market is still in line with our first red day trade setup. You'll also notice the smaller head and shoulders pattern in our first red day setup. It's day 2. Tuesday, day 2 typically expands the range. It closed in breakout. So just removing that out of your headspace is either having a starter, and then once that retests, understanding as this trade is moving away again, taking a second position, moving both to that lower stop loss level. Our risk is still the same. Once it clears that level, going to break even and locking in the money. And so we now potentially have a market that's dumping down into our midpoint range of the week. Wednesday closes as a first green day signal. Now just reminding traders, we have higher highs made on Monday. We're dumping down. We had a first red day signal back into breakout traders. That's the trade. Now keep repeating this. We're not trying to read the market every day. We're waiting for signals and then whether or not a market sets up into the New York window. Sitting and waiting until the market gives us a signal, and then how does it set up on the day into our New York timing window. Now with all these opportunities, each week we're looking to identify the best templates. Now first green day signal is a low of day, low of session buying opportunity if indeed it presents. Page 64 in the playbook. Now just repeating, we went through our basic template. Monday, day 1 opening range. Tuesday, day 2 typically expands the range. That's our initial balance. But we had higher highs. So we may now be making a larger dump and pump template. First green day signal, the market trades higher on Thursday before dumping down. The market trades higher into our New York window, giving traders a sell high setup inside of our high of week level. Dumping down into the first green day signal before engulfing and pulling back and closing basically at the same level as our first green day signal from Wednesday. Now this higher high on Thursday now potentially sets us up for the dump, coil, and pump opportunity on Friday. Now Monday made the opening range a higher high. Monday, Wednesday, Friday template, first green day signal day in our midpoint range of the week. How does price set up into Friday in our New York session? So traders that were looking to sell up top, if they took a sell high opportunity in our New York window, it's a nail and bail. We're trading back into higher time frame buying that's formed our peak formation low on Tuesday, day 2, day 1, day 2, day 3 blowing off in the direction of the trend before dumping, engulfing, and coiling sideways into Thursday's close. So natural gas has a different timing window than the other markets. It can move in that first hour often on these parabolic opportunities, but we have a market that opens up 8 a.m., dumps down to closing price from Thursday, giving us a little pin hammer opportunity for an early entry start. And then our engulfment for the basic model for trade entry criteria to remove analysis paralysis for other traders. But again, just a simple entry, stop loss, and a take profit level. We can project a 200% expansion of the range outside of the high of week level as a potential profit target. It's a Friday. We want to lock in the money. But just a simple dump, coil, and pump template. Now, going back to our 1 hour chart, I just want to keep repeating to traders. Instead of trying to catch every move, we're waiting for signals and opportunities that are scalable in size. We had a first red day signal that aligned into our New York timing window, the 10 a.m. club, a market that then reversed on our midpoint range of the week, our signal day, giving us a first green day signal, pumping higher before dumping down and closing back inside of Thursday's range. A reversal that traders may have taken, even though we're not at the high of week level, we're inside of the range, but coiling sideways. This reversal now is potentially going to fail in line with our higher time frame first green day signal, targeting back to the high of week level. A scalable opportunity. Dump, coil, and pump on our Thursday, Friday template, and on our Monday, Wednesday, Friday template, a larger dump, coil, and pump. Rinse and repeat. Now that's an example of two explosive, scalable, parabolic trades. We had the US dollar index and we had natural gas, Thursday and Friday. Now, if you sat on your hands throughout the week, if you understand the difference between session trades, which are sometimes difficult to hold on to, they're not scalable in size, they auction back and forth, and the risk-reward opportunity is less. And this is an FOMC week, so obviously the backside, as we emphasized early on in the week, the backside of the week could potentially offer us some second-day trades or scalable opportunities. The same setups happen over and over and over again. Dump, coil, and pump, or pump, coil, and dump. Keep things simple, traders, and have a basket that reflects the session that you're trading in. Be willing to be patient, sitting on your hands and allowing the market to set up for the scalable rinse and repeat opportunities. Have a great day, and may the markets go with you.